just business news, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Vakil. First, the headlines. Asian markets slide after the Dow drops more than 1,000 points twice in 1 week. The SGX Nifty currently trading with cuts of over 200 points. And crude prices continue to head lower while gold re-emerges as safe haven. And JSW Steel puts in a bid of 13,000 crores for Bhushan Steel and Power. Tata Steel is the only other bidder in fray. That's a Bloomberg Quint exclusive. And Malvinder and Shivinder Singh stepped down from the Fortis Healthcare Board a week after the Delhi High Court allowed Daiichi Sankyo to enforce a 3,500 crore arbitration award given to the Ranbaxy case. And it's earnings Friday today with 6 nifty companies coming out with their quarterly results. But to address the U.S. markets, the U.S. stocks fell sharply on Thursday as strong earnings and economic data were not enough to quell jitters on Wall Street about the higher interest rates. But the Dow Jones Industrial Average closed more than 1,000 points lower. So let's go across to Bloomberg's Abigail Doolittle for all the update on the U.S. markets.
Stocks sold off in a big way in Thursday's Wall Street session. The Dow, S&P 500, and the Nasdaq all fell in a big way. In fact, the Dow shed more than 1,000 points, dropping by more than 4% on the session, very similar to what we saw this past Monday when the Dow was down 1,100 points and also fell more than 4%. In fact, on the week right now, the Dow is on pace for its worst week since October of 2008 during the financial crisis. That speaks to the level of the selling pressure, the intensity of the selling pressure, the degree of the selling pressure, especially considering we still have one more day to go. Now, the S&P 500, the Nasdaq dropped in a big way as well, both down more than 3.5% as the uncertainty, the volatility continues. Investors wondering what's next, what happened to the rally that we had in 2017 and in January. Those overbought conditions really turning in this shift in sentiment away from complacency toward a sense of risk off. Doesn't feel very fearful or panicked yet. In fact, it feels like orderly trading, and some experts are saying that we really need to see that fear and capitulation before there's any sense for a bottom. In fact, on the day, something interesting happened. On Tuesday, of course, there was a bit of a rebound rally. High-quality companies bought. Those names were sold once again today, including Apple, Amazon, Facebook, Microsoft, JP Morgan, again telling us that investors are selling stocks, high-quality companies, indiscriminately. Not surprisingly, there was a bit of a haven bid. When we take a look at the Japanese yen, it rallied on the day. So investors seeking a little bit of safety as the high growth, riskier stocks do sell off. It'll be interesting, of course, to see what Friday's Wall Street session brings. But Thursday was all about a risk-off day as stocks sold off. And again, the Dow shed more than 1,000 points. In New York, Abigail Doolittle, Bloomberg News.
And a lot of that may have to do with the rate strategy in the U.S. because the U.S. Federal Reserve will not deviate its path from the rate hikes, at least not yet, says New York Federal President William Dudley speaking to Bloomberg's Kathleen Hayes. Dudley says that the sell-off is just a recognition of the days of low interest rates may be over across the world.
Clearly, the market is adjusting to the fact that the global economy is growing quite quickly. And as a consequence of that, monetary authorities around the world are either starting to remove accommodation or are thinking about starting to remove accommodation. And that's a little different from what the environment we were in the prior, 7 or 8 years. So bond yields have moved up, and as bond yields have moved up, that's put a little bit more pressure on the equity market, and I think the equity market has adjusted in response. Now, in terms of what it means from the central banker's perspective, this is all about, magnitude and duration. The little decline that we've had in the equity market today has virtually no implications for the economic outlook because it precedes a very, very large rise in the equity market over the last few years. So if it stops here, the implications for the economic outlook are very marginal, and so probably not going to change our thinking about the economic outlook. If it were to go on much further, and be much more persistent, then it could start to affect household and business spending behavior, and then that could actually start to influence the economic outlook. But so far, I'd say this is small potatoes.
But I also want to put on the table that as I was thinking about this and talking to you today, I was thinking about 2015. When we came into the year, oh, the Fed's going to hike rates in March, and then there was, Brexit, and then there was a big sell-off in the Chinese stock market. It hit U.S. stocks. Fed passes in the summer, passed on a rate hike again in September, only one rate hike that year. So clearly there's a point where markets and market volatility can have a very definite impact on the Fed's path.
I think it depends a little bit about why the markets doing what they're doing. In the first quarter of 2016, it wasn't just about the markets. Commodity prices were falling very sharply. This is putting a lot of pressure on emerging market economies that were dependent on commodity exports. China was going through a pretty difficult adjustment. So it wasn't a market event per se. It was really things that were actually happening in the global economy. I think this is a little different. The global economy is doing fine.
Shifting focus to the Asian markets, the markets have opened lower in trade, taking cues from the US indices. And Nikkei has fallen as much as 3%, though recovered from these lows, so now down as much as 2.5%. Currently, we've seen weakness across automakers, technology, financials, and several other industries for that matter, and stocks have traded firmly in the negative. The Nikkei 225 is also in correction territory and has declined as much as 12% from its 52-week high. So there has been substantial amount of weakness in the Japanese markets for now. But what are we expecting in terms of markets today? Well, let's go across to Darshan Mehta, who is here to give us a dates set up. Darshan, not looking too good, at least as far as the SGX is concerned.
Yeah, so it's looking like a disaster, at least, a 200-point gap down on the SGX Nifty at this point of time. And it's in line with what's happening with the global cues. The Japanese markets are down, Hong Kong markets are down, and US was down in trade. So a 200-point gap down. Again, we managed to come back about the 10,600, but over the past 2 days, again, a sell-off has happened. So expect a very weak opening. It may not be 200, but definitely it will be a big gap down opening in trade. Look at the ADRs, and all of them had that indication that the markets would fall. So the bluest of blue chips, HDFC Bank was down 3.5%. There's ICICI, Vedanta, Tata Motors, which also fell in trade. So apart from it, all the ADRs ended, with losses that came in. Dr. Reddy's was the only one that was spared. But apart from it, on an average 2 to 3.5–4% cut was what we saw across the street. Now, crude has been falling for the 6th day in a row. There seems to be a big sell-off, and yesterday also there was this big sell-off. And if you look at the start again, the start is on a negative stride. So WTI is coming close to the $60 barrel per mark. Brent is below the $65 barrel per mark. So there is clear indication of sell-off as far as crude is concerned. But I was surprised not too much of a sell-off as far as the metals on the LME is concerned. So you had aluminium and zinc, which were trading up in trade. Even lead managed to hold on, but no major cuts coming in as far as copper or nickel or even tin. Tin was down almost 1.3%, but compared to what we saw in the equity markets, it's hardly anything. And even in China, the start hasn't been bad, because copper is down almost 0.5%, but apart from it, zinc has managed to hold on, and aluminium and steel are trading with a slight negative bias. So that's the cue that's coming in. And the precious metals have also not reacted very positively to the sell-off in the equity markets. They're trading rather flat, but all of them are trading with a positive bias. Now let's take a look at what the FIIs and the DIIs did. FIIs have been net sellers. They sold in 2,200 crores, and an equal number of amount has been bought in by the DIIs. So on a month-to-date basis, FIIs turned negative, and DIIs again turned positive with this 2,300 crore of net buying that happened. Now, the market cues in terms of what happened, the Nifty did well, but it was the broader market that outperformed. The mid cap was up 2%, and the small cap was up almost 2.5%. So there was enough traction that was there. Pharma as a space did extremely well. The VIX fell in almost 9% in trade. Now, as far as the stock sectors are concerned, pharma was the clear outperformer, led by the strong rally in Sun Pharma, and the Nifty PSU Bank was up almost at 2.5%. So that was the traction. 100-point uptick on the Nifty. What contributed? Infosys, HDFC, Sun Pharma and Reliance were the main contributors, but IT and oil, oil as well as some of the energy stocks and IT stocks, they didn't do well in trade. So that was the broad cue that we're seeing, Agam.
Well, thanks for that, Darshan. Of course, I will be watching out for the India Volatility Index, because what we've seen is a little bit of a dip yesterday, but today it is likely to rise. That said, let's take a look at what's happened in the futures space, yesterday, because we did see some amount of, unwinding. So we had some short covering coming along as far as Nifty futures is concerned. Going to the Nifty Bank futures, again, we did see some strength when in its underlying, up as much as nearly 1%, and similarly, short covering considering a decline in open interest. Now the VIX did fall yesterday, but again it's expected to rise in today's day of trade. What's really happened in yesterday's day of trade also when it comes to the changes in your put call ratio, well, that continues to remain more or less the same, but once again we could see a change today in terms of open interest. As you can see on your screen there wasn't really too much happening on the call side of things. Most of the writing came along in your 10,300 and 10,200 puts. This scenario again is likely to change, at least in the opening, as per the indications of the SGX Nifty. Now, in terms of stocks, I'm watching out for ACC because it had a very strong quarter, on account of which we saw fresh longs building in. Among other stocks, we're also keeping an eye on Cipla, which also moved up on the back of steady earnings. And on on the flip side, we're looking at some amount of weakness in Power Grid, where we did see about 8.5% increase in open interest towards shorts. But again, all eyes will continue to be on the benchmark indices, and what sort of a deep gash can we see on account of global cues. But let's shift focus from the currency to the commodity market, and Jayesh Khilnani is here with us to give us all the updates. Good morning, Jayesh. Crude will be in focus today.
That's right, Agam. So crude oil prices actually, that has seen a low of 5 weeks. So if you look at WTI, that is now trading just marginally above the $60 per barrel mark. And in fact, Brent has slipped below the key 65 mark that we were watching out for. Some of the reasons that we are picking up is that technical factors have come into play now. So WTI has actually testing its 50-day moving average. In fact, in early Asian hours, it has slipped below that. WTI crude has posted its biggest losing streak since April 2017, and the US output is at a record high. So overall, for some fundamentals and some technicals playing a negative hand for oil prices. As far as precious metals are concerned, we saw some stability come about for gold futures, which are trading near the 1320 mark. The precious metal that didn't do well was palladium, which has seen a decline of 4 days in a row. And that was the worst sell-off for the metal in over a year now. As far as base metals are concerned, there was some mixed trading going on in the London Metal Exchange, with the index eventually ending flat in trade. As far as individual base metals are concerned, aluminium, zinc and lead closed positive, while we had copper, nickel and tin, which ended lower on LME. One of the primary factor for copper declining was the inventory, which actually jumped up more than 7% to its highest level since July.
Well, thanks for that, Jayesh. Of course, crude will continue to be in the limelight today. But let's shift focus to earnings now. And we have Shraddha, Somit and Nikki joining us. Now, it is going to be a very big earnings calendar day because of the fact that, as many 6 Nifty companies are coming out with their quarterly numbers, and a majority from the energy space. So let's kick off these earnings with the oil and gas sector and get in Somit Sarkar to take us through what's in store for some of these like ONGC. So Somit, just start with ONGC. Good morning to you.
Good morning, Agam. So the third quarter of financial year 2018 was mainly aided by higher oil and gas prices for ONGC. Now, the domestic gas prices were revised from October 1st, 2018 to $2.89 per MMBTU versus $2.48 per MMBTU, while the Brent crude averaged around $61.4 per barrel versus $52.1 per barrel in the last quarter. Now, these higher crude prices with no subsidy sharing so far will result in a good quarter for ONGC. Now, if you see the headline numbers, the revenue is expected to be 24% higher to around 23,468 crore rupees, and this revenue growth of 24% could be the highest by the oil explorer in the last 25 quarters. Now, EBITDA is expected to be 47% higher, while margins are expected to expand to around 57% versus 48% in the last quarter, while net profit is expected to be higher by around 19% to 6,130 crore rupees. Now, net profit growth rate is lower than that of revenue and EBITDA on the back of lower other income and higher tax rate in the third quarter of financial year 2018. Now, if you see on the operations side, the realization is expected to come in at $61.3 per barrel. Now, this realization is expected to be the highest in the last 9 quarters, while crude oil production is expected to be flat at around 6.5 million metric tons, while gas production is expected to be 4% higher to around 6.5 BCM in the third quarter of financial year 2018 for ONGC.
Well, Sumit, that's as far as ONGC goes. What about your companies like HPCL and BPCL? They're also reporting their earnings today.
So if you see for the downstream companies, now Indian Oil Corporation came out with a good set of numbers, but for BPCL and HPCL it is expected to be a weak or a muted quarter for them in the third quarter. Now, the third quarter financial year 2018 will be in the third quarter it will be the higher inventory gains that will be the only positive for the oil marketing companies. However, this higher inventory gains will be offset by weaker refining and marketing margins that for BPCL and HPCL. Now the gross refining margin, or the Singapore gross refining margin, that is the Asian benchmark, was a bit weak in this quarter. It averaged around $7.2 per barrel versus $8.3 per barrel in the last quarter. On the marketing side, if you see, the gross marketing margin earned by BPCL and HPCL on sale of every litre of petrol and diesel fell down to 2.3 rupees per litre and 1.9 rupees per litre versus 3.1 rupees per litre in the last quarter. Now, this fall could largely be attributable to the lack of increase in retail fuel prices during the election period. Now, in fact, the profit and EBITDA of both BPCL and HPCL is expected to fall because of the weaker refining and marketing margins of the company. Now, the marketing segment will also take a hit because of digital discounts and GST and the negative impact of GST. For BPCL, if you see the headline numbers, now revenue is expected to be 21% higher, while net profit is expected to fall by 12% and EBITDA is expected to fall by 7%, while margins are also expected to contract to around 5.1% versus 6.6% in the last quarter. Now, if you see on the operations side, the gross refining margin is expected to be flat around $7.9 per barrel, while refinery throughput is expected to be higher by 3% compared to the last quarter to around 7.2 million metric tons. Now, this is because the last quarter there was a planned shutdown of the Kochi refinery because of which the throughput was lower in the last quarter. On the sales side, if you see, it is expected to be 10% higher to around 10.8 million metric tons. For HPCL, if you see the headline numbers, the revenues are expected to be 22% higher, net profit is expected to fall by 14%, EBITDA margins are expected to contract to around 4.7%, while EBITDA is expected to fall by 7%. On the operation side, the gross refining margin is expected to come in at $7.6 per barrel. The throughput is expected to be flat at 4.6 million metric tons, while sales is expected to be 8% higher to 9.4 million metric tons in the third quarter of financial year 2018.
Well, thanks for that, Sumit. Big earnings coming in from the oil and gas space, but one big one coming in from the public sector banking area too. So the country's largest public lender, State Bank of India, will also report its third quarter earnings today, and lower treasury gains and asset quality are the big factors at play here. So we have Shraddha Babla joining us to give us an expectation from SBI. Shraddha, what can we expect from SBI today?
Morning, Agam. Before we start off, I just want to flag off that the reported year-on-year numbers are not comparable, given that SBI completed the merger of its associate banks and Bharatiya Mahila Bank only on 1st April 2017. So just going to share some of the Bloomberg estimates. Net interest income is seen at about 19,092 crores. Net profit is seen at 2,059 crores. That would be a significant improvement from the 1,500 crores of net profit that we had seen in the September ended quarter. Like you said, yes, non-interest income is going to dip on a sequential and year-on-year basis, whichever way you compare, and that will be on account of a dip in treasury gains and absence of any extraordinary income as well. Remember, in the second quarter, SBI had made an exceptional gain of 55,400 crores, from the stake sale in SBI Life Insurance. Loan growth again has been pretty muted for SBI, so that's expected to continue in this quarter as well, below industry averages, and a single-digit number is what we are expecting. Incremental stress likely to be curtailed, but credit costs are expected to remain elevated on account of the NPA aging and provisions towards NCLT accounts. So important to watch the commentary with respect to resolution on the larger accounts. A movement in watch list which stood at 21,000 crores in September. The movement in slippages, fresh slippages stood at 9,000 crores in September, and provision coverage ratio showed up are going to be important, as is going to be the outcome of RBI audit, that is if at all there is any divergence. But broadly, yes, asset quality is going to be the key factor to watch out for.
Asset quality it is, Shraddha. We'll be watching out for that. But moving on to the metals pack then. Rising steel prices and higher production in India is expected to aid Tata Steel in the third quarter. The country's second largest steel maker is expected to post a multi-fold rise in its bottom line. We have Nikki Mirchandani, who is standing by with all the details. Nikki, the European vertical may prove to be a drag though.
Yeah, that's the story that has been playing out for Tata Steel from quite a while now. We continue to focus on the standalone business, on the improving domestic fundamentals. Having said that, just to give you a basic rundown of the numbers, we are expecting a good 17% growth on year-on-year basis for this company in terms of top line at a number of around 32,500 odd crore. EBITDA is seen rising up by 46% year-on-year basis at a number of around 5,100 odd crore. Margins are seen expanded to 16% as compared to 13% in the corresponding quarter, and net profit, as you just mentioned, is a multifold jump. We're looking at a number of 1,400 crore as compared to nearly 232 crore in the corresponding quarter. Now, the consolidated EBITDA per ton, EBITDA per ton is something that we'll keep an eye out on, both on standalone as well as consolidated basis. On consolidated basis, expected to rise 43% year-on-year basis and 13% sequentially to a number of around 8,275. And on standalone basis, it's going to be a 13% growth, both sequentially as well as on year-on-year basis, to a number of around 3,820 odd crore. Now, your higher revenues combined with your realization and operational leverage is expected to aid the margins of the company. Again, a key number that we'll keep an eye out will be the standalone volume business, which is expected to register a good 4% YOY increase at a number of around 3.1 million ton. This is expected on back of ramp up in Kalinganagar plant, and also the European sale volume is expected to decline by as much as 8% sequentially to 2.4 million ton. Key things that we'll keep an eye out will be the cost pressures for the industries, the import from China, price hike undertaken, as you just mentioned earlier.
Well, thanks for that, Nikki. So Tata Steel among one other, but you know, that's not over. So we do also have Mahindra & Mahindra, who will report his third quarter earnings. Now we're expecting a steady quarter from M&M, because we're expecting about a 25% growth in its profitability, another you know, near 12% increase with respect to its revenues. Even on the margins front, we can expect an expansion in margins, and consequently we could see profits move up quite substantially. There you have it. In terms of margins, we are expecting it to move up from 13.7% last year to 14.8% this year. Now, among the key factors that we will be watching out for is the raw materials and the input costs, as we have seen an uptick in a lot of these commodity costs. However, when it comes to tractors, realizations in the tractors will be the most important. You must remember that the tractor segment is the one which gives M&M the fillip with respect to its margins. You know, M&M does not enjoy as high margins when it comes to its utility vehicle space. That said, we are going to be keeping an eye on what the management has to say with its outlook in the utility vehicles area as well as tractors business, the products pipeline for FY18 and FY19, and you know, several other factors that may be at play with respect to the economy and demand as a whole. So these are some of the areas that we need to keep an eye on when M&M announces its numbers. But on to the latest on Bhushan Steel. Power and Steel, asset sale. It's Tata Steel and JSW Steel that's fighting it out to acquire the stressed company. Now, 3 people with direct knowledge have told Bloomberg Quint that JSW Steel's bid amount stands at around 13,000 crore rupees. And Vishwanath Nair joins us now on the phone line with the details. Vishy, how does the bid stack up against the liquidation value?
So from what we know at this point in time, Agam, the liquidation value was estimated about around 10,000 odd crore with respect to Bhushan Power. So in that sense, the 13,000 crore number doesn't seem much higher than the liquidation value actually. Also the fair value, which was arrived at by independent evaluators of the company, was closer to 25,000 crore. So obviously, this bid is much lower than the fair value and very close to the liquidation value, which might be, which may put off the bankers. But we don't know what Tata Steel has bid at this point in time. Remember that under a common negotiation agreement, the lenders have agreed that they will only negotiate further with the highest bidder, whoever the highest bidder is. And in this case, unless we know what Tata Steel has bid, we won't be able to determine who the highest bidder would be. Also, the lenders also hold the power to actually cancel the whole process and call for a rebid if they are unhappy with the kind of bids that have come in. That is also something that the bankers have armed themselves with. Bhushan Power and Steel, remember, it has never been on the horizon or never been something that JSW Steel's management has been talking about. They haven't gone out in public and said that this is an asset that we really want to acquire. That has been more about Bhushan Steel and Electro Steel, companies like that, Monet Ispat, wherein JSW Steel has come out publicly and stated that they want to take over this asset. So, we are not entirely sure how exactly Tata Steel's bid is going to stack up against JSW's and who will eventually sort of emerge as the highest bidder in this case.
Absolutely. Well, we will be watching out for what Tata Steel also does. But for now, that's the update with respect to Bhushan Power and Steel. Thanks for that, Vishy. Thanks for joining us and giving us those updates. But moving on to the stocks and news, which will be in focus in today's day of trade, we have Shraddha joining us back to give us that list. Shraddha, what can we expect in terms of market action?
Agam, to start off with, some of the stocks that we are tracking includes Axis Bank, where they've sold 5% stake in NSDL for a consideration of 165 crores. You also have Canara Bank, where a board approval to raise 1,000 crores via QIP rights issue or a preference share issue has come in. Indraprastha Gas is yet another one. They have received authorization for Karnal City Gas Distribution Network. Marathon NextGen, where the board has approved a 2:1 stock split. You also have Fortis Healthcare, which could be in focus as the promoters of Fortis Healthcare, that is Malvinder Singh and Shivinder Singh, have resigned as directors of the company, and they've said that this is in the interest of good governance. Sugar companies like Balrampur Chini, Bajaj Hindustan Sakti Sugar could also be in focus. Now, this is on the back of an ET report which says that sugar sales by mills have been capped for 2 months, which actually means that it could improve sugar prices further. Having said that, on a day when SGX Nifty is trading 2% lower, I'm not sure if we will actually see some positive reaction there. But lastly, on the back of bulk deals, you also have Triveni Turbines, which should be in focus. Reliance Capital Mutual Fund has bought 4.6% stake yesterday, but Akash Prakash's Amansa Holding has sold 4.7% stake. So we could see some negative reaction coming in there, Agam.
All right, plenty of stocks to watch and keep an eye on. But again, a lot of that will depend on how the benchmarks and the broader markets open. But moving in, that Finance Minister Jaitley has hit out at the Congress party over its allegations of corruption in relating to the Rafale fighter jet deal. Now, Jaitley accused the Congress of compromising national security by demanding details of the deal. He hit out at the Congress President Rahul Gandhi for trying to manufacture a scam when there was none.
Give the details of the fighting weapon system bought from the Americans and the details and the cost. And Mr. Pranab Mukherjee replies, details of government expenses on purchase of arms and weapon systems are classified in the nature, and it would not be in national interest to divulge them on the floor of the House. Yes. So please ask your party president who has raised this issue to kindly go back to Mr. Pranab Mukherjee and take certain lessons from him. Yes. or national security.
Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned in the Bloomberg Quint.